on. So welcome, guys.
Hey everyone, how's it going?
Yeah, we got Joe tuning in already. He's always the first. Hold on, let me go live on Instagram here. There we go. All right, there we go. All right, so it's been a while. I was gone for shoots about 3, 4 weeks. So fill us in. What you guys been up to, Dylan? What you been working on?
So I've got a 38 plex I'm working on. I actually have a call with the seller today. We're trying to get him to do seller financing because if not, just with rates where they are, we have to offer him like way far below what he's wanting. So we're trying to see if we can do something a little bit creative to get him paid a little bit more on that one. But I'm hoping we can get that one done because that would be fantastic since I just switched over to being a full-time broker this month.
Nice.
Nice, Stan, and you've been traveling, I'm sure. What have you been up to?
Sure. Like I said, mostly been traveling. Still not in the market to buy any more properties, just focusing on improving the properties that we do have. We've been working on more renovations, have more renovations that are scheduled to happen this month. But besides that, we're just trying to improve our Airbnb, improve the booking rate, see if we can get that up to more consistent booking throughout the year instead of just like our high seasons are very, very nice, but then we get into summer months where it gets low season. So we're just trying to find ways to market it and make it more stable throughout the entire year. Besides that, just a lot of traveling. We're actually gonna head over to Miami later on today, taking a small trip
Ooh.
with family for a couple of days up to Miami.
Nice, yeah. So both of you guys, kind of different directions, maybe. Like Stan, like you're saying, you're trying to kind of double down what you're doing. Probably improve what you're working on. And Dylan looks like he's trying to acquire things. So this was kind of Stan's topic, maybe. He sent to me. I think it's a great one, looking at where the economy and market is and all the uncertainty. So Stan, like I guess maybe you can fill us in as far as how are you looking at things and maybe go into a little bit more like what you're looking at right now, like with all the uncertainty going on.
Right now, I'm still kind of wait and see mode where I'm trying to just gain a large amount of capital, kind of save up the funds I have right now and wait for a very good deal. Like Dylan said, right now, with the rates being what they are, it makes finding a deal very, very difficult. Simply because if you do find a deal with the rates, it's very difficult to find a cash flowing deal. In a best case scenario, I've been able to find deals that would break even, but for me, that's just not my target. Where I do want to make sure I have a healthy cash flow every month in order to move on a specific deal. I think that eventually rates are going to go back down. I'm not sure if it's going to be this month or this year or next year, but I'm just kind of trying to put myself in a position to begin moving on properties again if rates do go come back down. In the meantime, if a property does stand out to me, then I am looking at the option of still acquiring it now and then refinance later. Because if they do refinance, then I think that when the rates do go down, the prices may start going up again. So that's kind of like the balancing act. If I get the property now at a with the requirements I need at the cash flow I need, then I can improve that cash flow in the future by refinancing. Getting that property would be a ideal target.
Yep, great strategy. I think that it's hard to really fault anyone for what they're working on right now. I think the main thing is you're doing the work and either you're improving your systems or you're looking to acquire things. And that's why, like I said, Dylan, you just got your license and you're looking to probably expand. And like you said, you just got off a call with a private money lender. So what are you seeing out there? What are you working on?
Yeah, so Stan, we're gonna have to talk sometime about those Airbnbs because I need to see if I can do that in some of my apartments or something like that because I think that would be fantastic. But what I'm working on right now on the private money side is I'm trying to find some people that can lend to us for some of these houses we're finding in the surrounding counties near me, just around Indianapolis. Um, we're finding some houses for like somewhere in the range between 60 to 100,000. I know that's a big range, but like it could be 80. We just got one for 95, then we got one for like 70. And a lot of them are taking like $40,000 worth of work. And we're finding that, on the back end of that, the ARVs are like 160 to 200 for some of these houses. So we're kind of at a point where we've tapped out all of the cash that we want to use for this, and we're like, okay, where can we go get money from to keep doing more of these? And our plan for those is just refinancing out to DSCR loans on the back end. So, buy it, rehab it in 3 months or so, and then I've been talking to a few DSCR lenders like Convoy and Lending One, just to see what we can do on the back end of those. Um, I don't think doubling down either on like what you're doing right now, or like focusing on improving your existing portfolio while rates are high is a bad thing either. I think it's a good play. I mean, I look at some of the things that we have now and like how can we just improve what we've already got and increase some of the rents, instead of trying to rapidly expand as we have some of the tariff stuff going on. And yeah.
Right.
All right. So, Dylan, looks like you paired your channel. So we have a lot of people tuning in from your
I see
channel.
that.
But yeah, we got Corn King, Proof of Old. Don't those of you tuning in from Dylan's channel, don't forget to subscribe to my channel also. And Joe, I see Joe. Joe, try and put a comment in because for whatever reason, I don't see it popping up on my end in the chat. I see it popping up on my phone, but I don't see it here. But let's see. We got Ike here, Hyder, Flavio. Flavio, thanks for tuning in. Flavio just joined school. So welcome. Hope you're enjoying it. Hope you're finding good information there. Let's see. Harrison has a question for you, Stan. It says, Stan, would you look out of state for better cash
Absolutely.
flow parts? Maybe an area you like to travel or move to?
Yeah, we're definitely looking at out of state as an option. With us to move out of state, the main thing that we want to make sure we do first is establish connections in that area first. We think it's more important to find connections such as a property manager within the area before we actually start even looking for a property. Having a boots on the ground team that is able to do a job that you trust, that's going to be a huge difference between having a cash flowing property and a non-cash flowing property. If we find like the ultimate perfect property that meets all our boxes on paper, if we don't have a team in place on the ground that's able to actually manage that property correctly, then the best property in the world is going to turn to absolute nothing in relatively short amount of time. So we are looking at different areas. We just want to make sure that we have a team in place in that area before we actually lock in. One of the areas that me and my wife discussed in the past, we're not looking to do this anytime in the immediate future, but in northern Montana, right around the area that is Glacier National Park, we think that specific area is very, very high potential. Like the area is absolutely gorgeous, but it's not really developed. On the western side of the park, you have Kalispell, Montana, which is a moderate-sized town that caters a lot to the eastern side of the park. But the western side of the park. Kalispell is on the western side, but the eastern side of the park has even more attractions than the western side. But the eastern side, it's not really developed at all. I can't even call them towns. It's a handful of buildings with a gas station and a couple of spots, but there's a lot of raw land out there. So I think that's a high potential area for someone getting a little Airbnb park or a little log cabin park, just to give people a entryway into the park that's more convenient. Because it is such a large park, getting from one side of the park to the other is quite the lengthy drive. So if someone stays in, say, Kalispell, Montana, to use that as a gateway, getting from Kalispell to one of the more popular spots, such as Mini Glacier area, it'd be about a hour and a half long drive. So by staging them more on the eastern side, it's going to open up. We think that's going to open up more avenues for them to shorten that drive every single time.
Someone they're saying we're not streaming on YouTube. Well, I don't know. It says we're streaming here, but
I see it on mine and your channel.
Jovi says he's still waiting. Weird.
I see it streaming here.
Huh. I don't know if anyone else is here. Hyder, Harrison. Oh, Joe says he's here now. I don't know. I don't know what Joe's talking about. Okay. Are you guys the reason rental properties are going up in price? Ooh, does anyone want to touch that one?
Stan, you want to
Dan,
get
you
that
want
one?
to go first?
I'll give it a shot the best I can do. I don't say we're the reason that rental prices are going up. I'd say that's a market rate. Unfortunately, rent has always gone up. If you go back through the last couple hundred years, through the past couple of decades, I don't think we've ever been to a time where you can go to an average renter and they'll happily say, yes, I am paying a fair amount of rent. No matter what part of human history you go to, people are always going to say that the rent is too high. That's just the nature of humans. That's the nature of renting. And over time, rent has always, not always, but the majority of time, rent has consistently gone up. Yes, there was a lot of sticker shock between 2021 to 2022, where rent has gone up considerably more than it has in the past. But I would call that more along the lines of inflationary. Unfortunately, there was a lot of, I don't like getting political, but there was a lot of government spending that really heated up inflation, and that affected everything in the market. That affected the rates of property insurance, that affected the rates of general contractors, that affected the rates of materials, that affected the rates of repairmen. So those are all additional expenses that forced additional expenses onto the rental market. And a lot of those expenses, maybe not all of them, but a portion of those expenses were passed on to renters as well in the form of higher rent prices. That's just a market factor, which is very, very unfortunately unavoidable. On a personal level, we didn't push all the expenses onto our tenants, but we did have to increase our rents in order to compensate for those additional expenses.
Yeah, no, I think that's a really important point. So, like, we don't just raise rent prices for the fun of it. Like, yeah, we know when we improve a property that there's going to be increased rents with that, but that's because we're spending a lot to bring the property up to a higher standard. But a lot of the input costs rising is, what factors into that. Like my taxes are up. I think it's since I just bought the property, they're up like 300% this year, but that's just because their tax basis was so low and I paid a lot more than they paid for the property. So we're going from like 1,200 a year to like 37, and I think next year it's going to be about 4,500, just based on my homestead exemption falling off. So I'd say, yeah, I mean, we have to pass off some of the input costs just so we can continue running the business as is. And I saw somebody from my channel comment that they'd rather us buy it than BlackRock, and I do think that's a good point because when you're dealing with individual landlords, like we care a lot more. It's not like all of our tenants are a number on our spreadsheet. Um, of course, you look at the rents on the properties that you get, but we care about the condition of the property and the tenants significantly more than you're going to get if you're dealing with a major property manager or a major investment fund.
Yeah, I definitely think that's a very good point. Where if there's ever a property like we're personally invested, it's our money is in the property. It's also we live on in the property itself in one of our buildings where it's a multifamily. Even if we aren't living in it, it's another property that's on the other side of the state that we own and rent out. If a tenant ever calls and says they need this repair, we have someone there the next day as best we can. Like we are actively there to take care of the property. Uh, Even if we know on the rental side, if we know we can raise rates, we don't always raise rates. Where we still want to make sure we're keeping the tenants that we like, the ones that we know are taking care of the property. We're more than happy to like be willing to rent it out for a little bit below market value in order to keep a good tenant in place. That's usually not a practice that you're going to have at the larger corporate owned rental properties or the larger property manager properties, where if a year has gone by, they're going to automatically increase the price to market rate regardless of any personal conditions, where there are, like you said, it's purely numbers on a spreadsheet.
Mm-hmm. I saw Flavio ask if I have a specific cash flow for unit target. For me, it's more based on the total property. If I had to guess based on what my properties are doing right now, on the small, like 2 to 4 unit multifamily side, I aim for closer to 4 or 500. I think I'm going to get a lot of that when we come to the refinance. But I think right now my 3 units are at about $400 a month in cash flow, and then on the larger multifamily side, I think in the 300s. It's like 380, and then yet again, I'm looking at a refinance to push that closer to 4 to 500 per unit. That's really my target, just because it allows us to factor for any additional things. This is like the net at the end of the day, like what we're trying to achieve. But I know there's capex items that come up sometimes. Like just recently, I had somebody call me about another AC unit that went out, and you guys are probably going to be hearing about this for the next year on my 12plex, because I've got 12 of them in total, and so far I've replaced 3. There's one from 2011, and then the rest of them, they're all going to have to be replaced because they're 1995s, and they use Freon in these older ones, and that's about $800 for a recharge, at least where I live, and most of the time, the reason it's needing recharge is because there's a hole in the line somewhere. So, yeah, we're going to be doing quite a few of those over the next few months.
Yeah, I think. Oh, go ahead, Stan.
Yeah, I definitely agree. HVACs are a general pain right now. We replaced 2 HVACs on 2 of our single-family homes last year. So luckily now we have 2 brand new HVACs in place, but those can definitely wind up being very costly repairs. When we run our numbers, we do put a 5% per month chart, expense line into our numbers for our capital expenditures. That way we try to take everything into account when we measure out the net cash flow, including percentage for maintenance, percentage for capital expenditures. We try to make sure that we take into account every single line item that we can when we're calculating our cash flow. Just like you said, we want to make sure that there is some room in there. So if the numbers don't work out, if something unexpected comes up, we have a little bit more wiggle room.
Yeah, or do you have an actual like dollar amount per unit? Because I usually don't think about it like that personally. So when I'm asked, I have to think about it like Troy. You guys all know Troy. He asked me about that a couple days ago, like what we aim for, because he was telling me what he aims for on his rentals, like per unit. And I'm like, huh. I'm thinking of like the cash on cash return for the property, not necessarily the per unit dollar amount. But it makes sense. It's like just different ways of dissecting, like how much money do you have to put into it to get X. Like, do you have one, Stan?
I don't have a per unit dollar amount, but I'm more of a percentage person where if I'm going to expend X amount on a property, then I need a certain percentage of that to be in cash flow, like to be able to cash flow a certain percentage of that.
That's where I'm at too. Looks like Trade Better Harrison had a question about the indie market. Harrison, if you want to look at the indie market, I'm a realtor. I could help you find something. I'm connecting with all the wholesalers right now because I'm looking for houses too. Yeah, if you're leaving the Pittsburgh market, I can show you some stuff. And I know the east side pretty well. I don't know the west side, but I know that those do have some pretty good rentals over there too. I will say stay out of Marion County. I know there's a lot of wholesalers and like there's a lot of really cheap multifamily units in Marion County. I'm just not a fan of it. Big cities are so street by street. You can find some good stuff up on the north side, but on the south side and southeast side, it's a little rougher, and you just don't want to be buying over there.
He just pivoted, man. He's not gonna. I don't know. Maybe he's just seeing what's out there.
Hey, Indiana is good. I can bring people to me.
I just saw that. I don't know if you guys follow Ace with rentals or rentals with Ace, I think, on Instagram. But Indiana was like his #1 market for affordable multifamilies, I believe, or small multis. Harrison said, "Nope, just curious." He's happy with Pitt. Attaboy.
For a small multifamily, New Orleans is a pretty good spot as well. It's still, especially in the older city, we still have a lot of duplexes, triplexes, and fourplexes throughout the city. So that's one advantage that we have in going with an older city model, where the entire shift away from small multifamily into single family exclusives, that was happening around the 1950s, 1960s. So if you're in a like city that really grew up prior to that time period, finding those small multifamilies is a lot easier. Even with New Orleans, the actual city of New Orleans, they are have a lot of multifamilies in there because the older part of the city is been around for quite a while. But then when you move out into the outskirts of the city, into areas like Jefferson Parish, Metairie, West Bank, those are newer, and those kind of shifted more towards the single family home model that we has become more common since the 60s.
I'll tell you one thing that I'm looking at that you might want to look at in your market and see if you have anybody that builds these. It's modular built, like stick built homes. So we have a factory or like warehouse downtown Indy where this company called Volume Mod will actually, and this is not a ad for them or whatever, but they'll build them inside of their warehouse so they have like optimal conditions for everything. So once you get the foundation laid and all your plumbing and electrical done, they'll come just set the units on there, put everything together, and it looks like it's going to be much cheaper than actually having something built ground up. And so that's something that I'm starting to look at too, just for some of the infill lots in Hancock County and Shelby County.
For any idea at all, that's going to lower the cost of housing, so more people get into the property ladder.
That's that's what I'm aiming for. I want stuff that I can rent for like much lower than some of these quote unquote luxury apartments that are going in. I think the only thing luxury about some of these is the word in the name of the apartment and the fact that they have granite countertops and stainless steel appliances. I'm like, we have similar apartments. I just put Formica in there and you put in granite countertops. I could call this one a luxury too if I wanted to.
No, you're not wrong about that. A lot of luxury apartments. It's kind of the same thing with flipping houses, where a lot of the focus is on the bathrooms and the kitchens, simply because those are the most cost-effective things to actually renovate.
Hmm.
In terms of a lot of that is because they're smaller areas. It's going to cost less material to fill up a bathroom with tile than it is to fill up a bedroom with wood, like flooring. So you can increase the price of the property more by renovating these smaller units, like smaller spaces like kitchens and bathrooms. So that's what a lot of apartment units tend to do as well. There's just a lot of focus from renters on those areas as well, where if they want a modern looking kitchen, they want a modern looking bathroom. But in reality, when it comes down to a bedroom, all it usually is, it's as long as the floor looks halfway nice. There's a bed in there and a desk in the corner. That's pretty much been the standard bedroom for quite a while.
Yeah. No, I think it's funny. I saw somebody comment we should bring back the carpet in the bathrooms.
Nope.
I'm not about that.
Nope. That's a great
Well,
way to have mold.
okay, well, I think we touched on it last. I don't know if you saw Dylan in school, but that was what Craig posted a question. He didn't really say carpets in the bathroom, but he said he's going back to carpet in his rentals. He believes because of the issues with LVP, he's starting to find out more about mold getting underneath, and even
Mm.
he posted some links to videos, and even um, these guys, I think they're flooring installation guys, or I think they own real estate also, but their issue with LVP was more from a health standpoint. They were
Hmm.
talking about how bad it is for you, and they're anticipating that, you know, 20 years from now there's going to be all these lawsuits against LVP flooring. But yeah, it was interesting. He was talking about it. He's going to go back to carpet. Um, but yeah, I don't think the bathroom, but I think he's going to look at it, having carpet. Do you guys do crypto? Just someone has a question here. He was from your
Ooh.
channel, then now he's on my channel. But he says, when do you think Bitcoin is 100,000 again?
When people
Um,
get irrationally exuberant.
uh, Crypto is definitely not an area that I choose to invest in. People got into crypto at the right time. They definitely made a whole lot of money, so I'm more than happy for them. But it's just not a asset that I'm particularly interested in.
Yeah, I actually thought it was interesting to see like because I look at like everything on a sliding scale. So like you have real estate, and I would put like the what do you call it, treasury securities like at the safest, and then you'd have real estate, and then stocks, and then crypto. But I thought it was an interesting thing to see just in this past week. I think Zuber mentioned it on one of his lives that he does, that the treasury market and the stock market and crypto was all selling off at the same time. And usually you see like if stocks and crypto are selling off, like people are buying more treasuries. And I thought that was interesting because it just it to me it just seems like a lot more people are going to cash in general, and like not just like cash as in like these treasury bonds and stuff like that you can buy, but just like cash. So I want to dig into that a little bit more and figure out what's going on there. But it's pretty interesting to see, along with the dollar going down too. Like it's craziness.
Yeah.
I think
Do you
it's
guys
just
follow Jay Scott?
I don't.
Mm,
I don't
Is
follow
he at
him.
BP?
Who's that?
he is, but he's also on Drunk Real Estate. But he had a great post today about the dollar being devalued and is it good or bad? And just like anything, right? It's kind of it depends. It kind of depends what your situation is and what the actual outcome is supposed to be, right? So there is reasons why it could be the game plan of why they're trying to devalue the dollar, where it's going to actually help with exporting items because
Mhm.
people that have the dollar are going to be exporting and it's going to cost less for them and things like that. So there's a back and forth, and I think that is to me the hardest thing is because whether you like Trump or not, their administration right now is kind of doing everything with a sledgehammer, and everything is happening so quickly, right? So from one day to the next, everything is changing. So it's difficult to get a read on what the actual plan
Mhm.
is in a
Yeah.
sense. And I think that's the hardest thing for a lot of people right now.
Yeah, no, I thought it was interesting to see like, the day where we had the markets down like pretty dramatically, and then out of nowhere you get that 90-day pause and you see that the S&P is up like 10% in a singular day. Like I have never seen that in my lifetime happen. Maybe I wasn't looking at stocks back in 2008, but I thought that was pretty insane.
So trade better, got my book and loved it. So definitely very, very happy that it's able to help you. But getting back to the stuff that's going on right now with the market, it's more along the lines where like, prices have dropped this much in the past. They simply haven't dropped this much this fast in the past. Where like the 2008 .com burst, that was a larger drop than this. The 2008 recession was a larger drop than this. The 2021 or 22 interest rate hike was a larger drop than this. But the difference is all those events, they were drawn out over several weeks or months. This was like a 1 week event. So it was very, very, very drastic. Uh, and I definitely understand like the absolute sticker shock people would get from that, where if you have that kind of change in your portfolio that fast, it is very, very frightening. Like I was looking at my investment portfolio too, and I was lost 50% of the value in 2 days, which I'm not gonna lie, it doesn't feel great. It feels like absolute crap when seeing that happen in real time. But on the flip side, I think the important thing is like don't panic. Markets have undergone transitions like this in the past. The people who are actually going to lose the money are the ones who panic and sell off, because eventually the markets are going to go back up. And I think this is no different right now. I think eventually the markets are going to stabilize and rebound and then continue to go back up. So the important thing is if you don't need the money right away, or if you're not at the point of retirement, hold on to the assets for now as much as you can in order to ride the roller coaster back up. Like you already experienced the down part. And one thing that I also tell people is think of it this way. Let's say we go into a complete apocalyptic scenario where the stock market, all your investments drop to absolute zero. Do I think that's very likely? No, not at all. But if we're in a apocalyptic scenario like that where all your investments drop to absolute zero, at that point, we're probably in a society where money no longer matters. Like at that point, we're probably going back to pretty close to prehistoric times. So whatever your investment is at that point, it really no longer matters. There's bigger problems in the world at that point if we got to that level. So I think this is just another case of the market is going to have its dips. The market's going to have its swing back up, and it's just important to keep thinking long term, where you're not trying to become rich tomorrow. You're trying to become rich in 10 or 20 years from now.
Yeah. I think you need the diversification too. I've seen a few people on LinkedIn just, I've noticed that's a place where a lot of the commercial real estate people like to hang out. And they're posting things about like, you've seen what can happen in the stock market. You should be shifting your money over to commercial real estate. Of course, it's to raise money for their syndications. I just don't think that kind of that kind of way of trying to scare people into buying real estate really sits well with me. I was talking to somebody about this recently because I've seen so many of those posts. Because ideally, like when you see the prices of these assets drop, if it's something that you believe in long term, my thought is you'd be wanting to buy more. I feel like it's only like real estate, gold, and stocks or crypto where people are like, no, if it drops, I'm going to want to sell it. Not, oh man, this went on a discount. I want to buy a little bit more.
If
Well, I
real
think
estate ever drops, I'll definitely be looking to buy more.
I think Stan made a great point earlier too. It kind of just depends where you're at in your journey, right? So like if you're close to retirement, you're gonna have a
Mm,
different approach
Yeah.
to what things where what you're looking at. Or if you're in retirement, right? So definitely, a lot of those people like we talked about, they have 401ks or whatnot that lost a tremendous amount of value. They're panicking a lot more than other people that may have income producing assets like real estate or whatnot, right? So I think you talked about diversification, and I think it
mhm.
depends also like where you're at just in your journey. But I think, and maybe I'm looking at it from a different lens, but I'm seeing it also where it's maybe this uncertainty is making people realize that they have to do more things in a sense where they cannot just put money in a retirement account and they're going to be fine when they retire, right? Because like a lot of people are looking at it now where they have no real control in a sense, right? Like they have this money in accounts, they can't really do much based on all the volatility. So it's kind of like in some ways getting rid of the bad habits that maybe has been happening in the past 20, 30 years, right? So people are going to have to look at different ways to plan their retirement or have more control over it in a sense, I guess.
Yeah.
That's always been one of the big advantages to places like the stock market, where you're not going to have as good a return in the stock market compared to real estate. But on the flip side, once you put your money into the stock market, you don't have to do anything. Like you put your money in, take a step back, watch the stock market do whatever it's going to do. You have no control over that, positive or negative. In real estate, the returns are typically going to be better, but you still have to continue to do work. Even if you have a property manager, you still have to manage the manager. If you're going to self manage the property, then you have to still actively manage the property on a day by day or week by week basis. So it's a lot more work involved in that, but you have far more control over what the investment is going to pan out to be.
Yeah. No, I would say if I was speaking to anybody that was younger than me, that's looking at like which route is the best for them. Um, I don't think there is a definite one, but I can say if you start with real estate and then do stocks later after you've gained some appreciation and equity growth, you'll have a lot bigger portfolio that you could throw into stocks down the line when you're looking at getting closer to when you want to start building up that portfolio for retirement. Like at the moment for me, it just doesn't make sense to own any, just because I keep funneling everything back into real estate. But I know within the next few years that I'm going to want to start balancing that out so I can, build up a little bit of liquidity, because I feel like that's something we all run into as real estate investors is, as soon as we get, at least here, for me, like if I get $50,000, I'm going to go buy another property because I can put 20% down on something that's 250,000 for a duplex, and then I can rent that out and get a little bit more income. But every time I get to that mark, on the other side of that, I might have like $10,000 or $15,000 left, and now I just picked up another mortgage payment. So I'm going to want to slow down on the real estate side at some point and just start building up the liquidity. So I think both sides are important, but I think real estate will get you there faster is my message on that.
I think if I'm going to give advice to anyone that's just starting off, this is just my personal opinion. I think
no advice, we just tell
okay.
about our story now.
Right.
Get ready
why
for the course.
If I was going to do it again, I think the first thing I probably would do is start house hacking right away. Like I'm house hacking currently, but if I was going to do it again, the first thing I would do is immediately go into the house hacking mode. The big reason for that, it's simply because rent is always going to go up and you still always need a place to live. So finding a way that you can actually lock in your biggest spending expense for every month, which would be your mortgage payment, to actually have that as a fixed amount going forward, I think that's a very large advantage to have. And then be able to supplement that with renting out another unit that you happen to own in the same building, or renting out a bedroom so you can kind of supplement your mortgage and keep that cost down. I think that's a very good foundation to bounce off of, purely because housing, whether it's mortgage or rent, is going to be your large expense. And there is going to be a tendency for, if you don't lock in that expense, rent will continue to go up. The place I was living when I first moved to Louisiana 15 years ago, I believe the first year I rented it was 900 or just short of 1,000. Now that same exact building is renting at 18 or 1900. So if I continue to rent, that would be my newest. That would be how much I'm looking to spend every single month now on just the ability to live in a spot. Because I bought my property in Lafayette, my first home, about 5 years into that. At the time, rent, if I chose to renew my lease at that same apartment, my rent would have been around $1,200, $1,300. But instead, I got a 15-year mortgage on my property that was costing me $1,500. So at the time, I was paying a little bit more for mortgage, but now 10 years have gone by. That mortgage note is still $1,500. Meanwhile, the rent is now $1,900. So that's a very, very important thing to remember for choosing owning versus renting, is not just what is the difference now, what will the difference be in 10 or 20 years?
So I have a question for you guys. I feel like it's a little bit controversial one in the real estate community. Would you guys consider either selling some of your properties or trying to pay off all of your properties at some point? Because I look at just like the small portfolio I have right now of the 15 tours that I have with my partner, and if we pick up this 38, like I'm looking at, if I just had that and I had that paid off, I know the cash on cash return is like a 7 or 8%, but at the same time, I would only have to manage like those doors, and then that's all I would have to do. So, like, I've been looking at like what I think it's Chad Carson, like what he talks about a lot, and I know from a financial perspective that it doesn't necessarily make sense in the long run, but it's been something that I've been throwing around because I'm like, man, that would be really nice if I could have that, that extra few $1,000s a month from each of the properties that could just go into like our company account, and we can, each withdraw that.
My strategy is like, I have a set amount of properties that I want to pick up, but like, I'm not in the business. I'm not trying to build a 100-unit portfolio. I'm not trying to build a 1,000-unit portfolio. If I get to 20, by that point, I'm pretty sure that's going to be enough for me. Like, I'm not really planning on getting past 20, so all I need to do is pick up 10 more, and I've achieved all my goals. And then I'll probably start paying them all down. Like you said, in terms of maximizing profit in the long run, that is not the best way to do it. Continue to leverage, continue to use your money to buy additional properties. It is going to lead to a longer return in the end goal, but it comes down to like the money needs to have a point. Like I'm not in the industry in order to just keep bringing in money for the sake of money if I have no use for that money past a certain point. This is just me personally. If I have enough cash flow coming in every single month to meet all my expenses, pay all my bills, make sure my groceries are taken care of, have enough, a little bit of fun room to travel or do whatever I want, and I have all of my actual needs and most of my wants taken care of by rentals, that's really all I like. That is the end goal for me. Where at a certain point, I do want to make sure I start transitioning away from just focusing on maximizing returns to actually enjoying the money that's coming in.
How about you, Mark?
Yeah, I think it's the same thing, right? It depends where you're at and what your goals are. However, I think it's a combination of like all of them, like Coach Carson. You look at like Cody, how he's trying to transition into newer properties. Brian Adamson talked to Zuber the other day, and he's talking about the same thing, kind of selling his portfolio more so to maybe downsize, but have more less leverage, but newer or better class properties also, and focus more on like the business side of what he's doing or enjoying right now. So I think even people talk about diversification. So I think even your portfolio, if you just want to do strictly real estate, you can look at it from that's how you're going to diversify, right? So maybe you're going to have a few properties that are paid off. So like in times like this where there's so much uncertainty, you have this kind of properties that don't have that leverage on them, right? So you can lower rent if you really need to, if you just need to generate a certain amount of cash flow, or you don't have to worry about payments on them. Yeah, you have property taxes, but even insurance, right? You can maybe not have, Curtis was on a couple weeks ago and he talked about this investor that he knows that I think he has like 30 or 60 units, but his strategy now is he doesn't even have insurance on these properties because so they're paid off, but he doesn't have insurance because he doesn't want to deal with the insurance companies anymore because I guess he's been burned by them so many times, right? So you try to file a claim or whatnot, and you don't get it's just such a hassle. So he does put reserves aside as if he had insurance, and he's putting money aside, but he doesn't pay that extra insurance anymore. So that's that one person's strategy. And that way, so you can diversify within real estate. So I think that would be for me. I'm probably going to look at having same thing like a small portfolio. I don't want to have this 100-unit portfolio when that I think most of us kind of maybe envision when we get started. But I do probably want to have a few that are paid off. I'm probably not going to have insurance on them. I'm just going to generate the most amount of cash flow on them. Probably try to get newer properties at some point, 1031 or whatnot, transition the older ones into less maintenance or less hassle in a sense. So that's where I would be. I mean, I'm definitely gonna kind of once you get to a certain point, you're gonna like Coach Carson talks about, you're kind of pruning the tree, right? You're trying to see which properties are the best performing, maybe which ones have the most maintenance upcoming in the next few years. So you might want to get rid of those. So that's kind of, and so you're always tinkering with it, right? But I think that's the best part about real estate is you have a little more control, and you can pass it down to, like you said, you can maybe pass it down to another investor. You just generate cash flow off of that. You give away the headaches. So there's so many different strategies. So that's kind of how I would look at it. So yeah, Dylan, how fast are you looking to retire?
So, to what you guys were talking about, I look at like if you had a 25-unit portfolio that was in cash, I feel like that's almost like you're generating almost the same amount of money, if not more, than you would have if you had a 100-unit portfolio that was financed. But so that's kind of how I'm looking at it. I'm like, could I really like cut this thing down to like maybe I sell my 12-plex and the 3-plex and just keep the 38-plex and pay it off, like if we get that one. Um, uh, Harrison, I don't know because when I got into real estate, the objective was to quit what I was doing beforehand, not because I didn't like it so much, just I liked real estate a lot more. And what I always say is I like every day to feel like Saturday. So when I've been working on these real estate projects with people, I've just noticed that like whether it's the weekend or whether it's Monday, it just feels like it all kind of blends together. So originally I was trying to target 5 years for my retirement. So 25 to 30. So I'd be 30 when I was done. I don't know now. I don't think I really want to. I guess. I do know that I do want to go on a lot more vacations because over the past few years, I've just been saving all of my money and I haven't really got to like go to places that I want to see and, take like a month long vacation here and there. But I would say, really my first objective would be like making sure my fiance doesn't have to work in a few years, like especially when we get closer to the kids mark. So I'd say that's about 30. And then for me, I'll probably still be working to some point, like as long as I can. But yeah, I mean, 30 was my original target. Now it's just unclear because I like the broker side. I like, helping my partners build the portfolios and stuff. But I do want to be able to like go on a lot more vacations. So I mean, for like 27, 28, 29, like somewhere in there in the next 3 years, I really want to be able to, go on a few weeks here and a few weeks there to like, go scuba diving in Thailand or something like that, or,
Sounds
go to the
like Stan.
Bahamas.
That's like Stan's life right now.
Yeah.
That's yeah, that's pretty much the stage I'm at where uh, making enough money from combination of real estate and salary to plus with my work schedule, I work 3 weeks and I have 3 weeks off. So
Ooh.
I do as much travel as I can.
Yeah.
This next trip later on tonight, taking the family to Miami. So that's going to be a just a short, quick little trip for 4 days before I get to back to work. But the next time I'm home in May, I'm taking a couple weeks going down to Australia and New Zealand. Then later on this year in August, I'm going down to Tanzania and Kenya to do a safari during the Great Migration. Uh, Still looking at other trips I'm going to possibly take later on this year and into next year. But travel is definitely one of those things I encourage everyone to do. There's a lot of amazing things to see in this world. So
So you can do all this traveling and you
yeah,
can't come join us at the one rental at a time event in Vegas.
I do. If I didn't have work scheduled, then I would like with the travel, the schedule is a little more flexible where I know the days I need to be on the rig working and I know the days I'll have to travel. It just so happens that in Vegas this year, it happens to be on the day I'm actually working on the rig. But I do want to get out there sooner or later. That is definitely a goal.
No, yeah, it was a good time. I'm sure he's going to be doing it, I think, for a while now. It's a great turnout, and maybe he'll change or find a new venue. But as of now, it's still going to be Vegas. But yeah, Dylan, I think you kind of I don't know if you saw that episode with Brian Adamson and Zuber, but that
I don't think I did.
I think I'm not saying you're going to sell off your portfolio or whatever, but I think that's definitely maybe the vision you may have, right? Like where
Mhm.
you're going to have a certain amount of properties, but it's more you enjoy doing the broker side of the real estate. So you're still going to be helping, and so you enjoy that. That's kind of what Brian
Yeah.
Adams, and he's figured out that the business side is where his passion is right now, and he's making a lot of money on that side. So he just kind of wants this hands-off portfolio, and I think maybe that's what you're going to be looking at, and definitely before you got to figure out the kid situation. That
Yes. Yeah.
shit's expensive, man.
Yeah. No, just full transparency. I was looking at like if I can get to somewhere around 20 a month, like that was my goal. Cause like if I divide that by three, that's like what I used to make at the previous place I was working at. I was like, I think I can make that work. But
We just finished up our taxes, and for the first time, the amount of revenue we have coming in from rentals equals the amount of active income we have coming in. So, in theory,
wow.
if I just pay off all those rentals, then all the stuff I was making from pure work is now replaced by rental income. So, in theory, if they're paid off, then I really don't have to work. I can't see myself just quitting altogether and not working. I guess I would be miserably bored if all I'm doing is sitting around on the couch all day watching TV. I can't do that.
Hey, you write
So
another
work.
book.
Oh, that's true. I can write another book.
See?
So
Yeah.
having something to do is definitely something like whether it's just the normal job or transition into a different job. But I think I'm probably gonna work at least for the foreseeable future, just having something to do, something. Plus, it's always nice to have that job there. It is still additional income, a little bit more of a cushion, like you said, diversification, where every now and then rental does have it doesn't go down very often, but it does go
Mhm.
down. So it is nice to have a additional buoy there of more income coming in to counter any possible things that could happen in the rental market.
But you also like the travel and photography side, right? Do you
Oh,
ever see
absolutely.
that? Do you ever see that? Like even your blog, right? So would you ever look at that as being like what you would be doing? Like you said, you're getting all this rental income. That would be like a passion project or business for you.
Oh, absolutely. If I get to that point where I don't need money anymore, and if I'm ever at that point, then I'd have no problem spending my entire life just traveling from place to place, taking photos and writing blogs. That would be a nice goal way down the line to aim for.
I think my counter to you saying that work is something to do is that when you don't have to work, you can do literally
Oh yeah,
anything.
no, I agree with that part entirely.
Uh,
Where if
Flavio says I need 28K a month. That's what he needs to retire my
Just
wife.
your wife,
I'm hoping,
not you too.
yeah, I'm hoping that it's you and your wife, Flavio.
No, we might have to talk about budgeting.
Yeah,
I
that's the
think
other thing.
20K a month would be
Marry correctly or marry smartly, Dylan.
Yeah, I'm
When's the
trying.
wedding? When is the wedding? You said you're engaged, right?
Yeah, I don't think it's gonna be this year. I think it's gonna be early next year. But we're not really doing like a whole thing, just because she didn't really care about having like a whole like wedding event thing. But we're gonna just do like a dinner with all of our family and stuff afterwards. So like probably have 30, 40 people at like a reception.
that's all we did as well. We had a just a peace wedding. Then we flew back to Northeast Philly to do a reception with the family,
Mhm.
and that was our entire wedding.
I think the cool part about that is all that money that you could have spent on the venue, you can now take that and go on a really nice vacation.
Exactly. That's been our plans this entire time. Is why spend 30 or 40 grand on a wedding when we can spend 30 or 40 grand and go on a nice trip together when we're able to.
Yeah, it depends what countries you pick too, because if you're talking about spending 30, 40 grand, if you're going to like Thailand and Korea and some of these other places, like you might be gone for a month or two, maybe more.
Uh, One of the last trips I took back in October was Nepal.
Uh-huh.
And you're 100% right about that, where if you pick the correct country, you can go there and have this amazing, ultra luxurious vacation. And it really would not be that expensive. Getting a top end hotel in the nice part of Kathmandu was probably $80 a day. Every time I was going out to eat, I was finding the top restaurants I can find. Even with tip, it never came out to more than $20 per meal. So
Wow.
the picking the right country can definitely be a good way to have a amazing vacation. The Nepal itself, it's a gorgeous country. There's so much history to see there. If you like hiking, it's one of the best hiking spots in the entire world. You have the Himalayas are right there. I got to see Mount Everest. I got to see the Annapurna Trail, which is one of the top ranked trails in the world for good reason. Just being able to hike fairly affordably through these beautiful mountains was an incredible experience. And overall, it definitely was not too expensive.
Yeah.
Yeah,
That's cool.
Flavio in the comments, someone says divorce might be cheaper.
I might agree if it takes the 20.
Yeah. So, like we're like kind of going back to the main topic about uncertainty and so like you said, Stan, you're still traveling, whatnot, Dylan looking to acquire properties. I mean, do you think anyone or really should be just doing nothing at this point? I mean, should they be paying attention to all the noise out there and just kind of um sitting back and complaining, I guess?
No,
So
I think that's a. Sorry, you take this
no,
one first.
okay. I don't really try to pay attention to a lot of the people that talk on YouTube or anything like that when it comes to like I can think of one off the top of my head that I'm not going to mention because I don't like seeing their channel ever. I've actually blocked it on my channel at this point so they don't show up. But they always talk about the market crashing and how everything is super dire. And I just don't like that mindset because it puts a lot of the people that want to get started in a very bad situation because they just look at everything as like doom and gloom where you can find houses that work. Like everybody will say like, single family homes like for rentals are dead or like this is dead or this is dead. And it's like you can if you want to put in the work, you can make any of those things work in this environment. I know it's harder than in 2021 where rates were super low, but at the same time, we're being able to push people down on price too because we just have a conversation with them about the rates. And just if you're doing nothing right now, you should at least be saving money to find your rental. But if you're sitting on a pile of cash, you should probably start going out there and doing a little bit more work to find something that fits your mold and not listen to a lot of the naysayers. Like get around the people in your community that are actually doing it. Like I know this might be nerve wracking, but like one thing I did was I just looked up everybody that owns multifamily in my county and adjacent counties. And I just called them. And like, first thing I said is, hey, I'm calling not to buy your stuff, but I want to ask you about how you built your portfolio. Kind of like the Cody and Christian multifamily strategy, but also like it'll just give you the confidence to actually do it. And if these people that see that you're actually trying to do something, they'll spend the time to talk to you as long as you have like good questions to ask and everything. Everybody that's in this business likes bringing somebody else up.
For me, sitting around doing nothing right now is it's a horrible strategy. Now it was a horrible strategy 10 years ago. It was a horrible strategy 20 years ago. It was a horrible strategy 30 years ago. No matter what kind of market conditions we're in, there's always some potential. There's always gloom and doom. Right now, like even thinking back to 2020, there was still the doom and gloom. People were saying, "Oh, this pandemic is going to destroy the entire economy. It's going to ruin everything. It's time to sell off. It's time to go hide in a cave somewhere." Meanwhile, it was a unfortunate event. It definitely caused a lot of damage, but at the same time, there was a lot of people who were able to take advantage of the market conditions there. We had the lowest interest rates in our modern history. So 2020 allowed a lot of people to lock in long-term like properties at very low long-term interest rates to take advantage of the market conditions. Going back to 2008, people were saying that this is the end of housing, that housing would drop, never recover. You should sell off all our housing. Meanwhile, if we look back now, the people who are still buying houses in 2008 to 2011, they are now exceptionally well off where they were able to take advantage of once in a lifetime opportunities because the housing prices dropped so much. They were able to get them at a severe discount, and they used that as a basis to launch themselves back up. I think this is just going to be another example of the current tariffs, the current stock market plunge. I think it's not an ideal situation, but I think if you keep educated, there are ways that you can find to take advantage of the situation and put yourself in a better position. No matter what the market is, there's always going to be a way to work the market to your advantage.
I would also say just don't be afraid of getting creative. Like with rates where they are, like as long as at least on the commercial side, I'm sure you can do this on the residential side too. Like don't be afraid to talk to sellers about, potentially doing a little bit of seller carry back and stuff like that. Usually I'll put a balloon term in there. So like they're only in it for 3 or 5 years and then they get their full money. But just, like trying to have more than one ways that you can more than one way that you can put things together to like actually make it work. Or like maybe the DSCR route makes more sense because you're tapped out on your debt to income ratio. Or like in my case, I just dropped my income to zero besides my rentals from my job, so I have to do everything on the DSCR or commercial financing route right now, or creative. Just try to find different ways to chop it up. There's lots of deals, you can find it.
Over here, I brought up a really good point as well. 2021, the interest rates were very, very low, but there were so many intense bidding wars that really hiked up the price a lot. I remember I was looking at one property in New Orleans before I picked this one where the property was great, the listed price was great, but then we found out that the bids people were putting in were 100,000 over asking price.
Wow.
So it was like, okay, well, the numbers no longer look great right now. That's going to be the cost of it. So that's one deal we had to walk away from. So there was a lot more. Right now, I'm not sure if we're in a complete buyer's market yet, but we're definitely in more of a balanced market compared to what we were 2021, 2022, where as soon as someone lists a property on the market, they had a multiple offers within 24 hours that are all above asking price. So that was a difficult part about that market. And now we're in a situation where interest rates are higher, but it's bouncing out a lot more. So that's why you just have to understand the market. And if you're not at least, if you're not actively participating, at least educating yourself more on the market to be more comfortable with it.
So it looks
Yeah.
like Jen is stopping by. It looks like the ladies of ORAT call has just ended. So hopefully that was a good one. My friend was able to join. I told her to check it out, see if everyone was nice to her. But hopefully she got some answers to her questions. I saw Jen and Lindsay were in there, so hopefully they helped her out. But yeah, I think definitely, hopefully, like I said, hopefully, you know, there's going to be some struggle. I think definitely the next few months, even a year, couple years. But I think hopefully it wakes people up to realizing that they can't just be putting money in savings accounts or even. I mean, I would even go as far as even just putting money in retirement accounts where you don't know really where that money's going or just having it automatically taken out of your paycheck. I mean, even to me, that's fairly risky in a sense too. You're kind of just putting money and you don't know where it really is and you don't have much control over it. So I think hopefully what's happening now is gonna wake people up, and I do kind of see it as like for me, like I talk about how COVID and all that opened my eyes to how having one stream of income and being reliant on that was very risky. So hopefully this uncertainty and pain pushes people to do things differently or even take a little bit more control of their finances. Troy says, just think how happy the banks were with so much down and property values high. Dylan, are you concerned about DSCR product going away?
I don't know. I haven't even thought about that. If it does, I'm strictly creative and commercial financing. I know my bank will let me do commercial loans on small multifamily. I just don't want to do that because then I'm on 5-year terms that I have to change the interest rate every 5 years. So if I really had to, like, and I found something and DSCR products were gone, I could just talk to my bank and have them do like a commercial 25-year term. But I think the goal would be to refinance that thing as fast as possible into, a more stable 30-year fixed rate. I mean, it's what I could do. I don't want to do that, but if it happens, it happens.
If you ever need more options for DSCR, I work with a company that also offers these DSCR loans. It's a private hedge fund, JM Capital. They do DSCR loans, renovation loans, and new construction loans. So if you want another option, you're welcome to reach out and we'll see what we can do with you as well.
Yeah. No, I'll shoot you a message on Instagram after this.
Yeah, definitely.
Yeah, I think,
Like DSCR
even if
loans going away though.
well, even
Yeah.
if it does, I mean, if there's money to be made, someone's going to come out with a product that works or is going to help people, right? So I think it could go away, or maybe whatever um, changes in the markets may happen. If there's money to be made, though, someone's going to come out
Yeah.
with something, right, to help. But I think the biggest takeaway is so Jen tuned in. It's a great maybe transition a little bit. So Jen tuned in. Jen is always, and I'm gonna throw her under the bus a little bit. She's always trying to. She jumps on whatever is the new thing in a sense, and I think part of that is good because she kind of goes down that rabbit hole and maybe studies it or tries to get more information on whether it's rent by room, whether it's short term rentals, whether it's wholesaling or whatnot, right? So she gets interested in these new things, which is great. But she also has her partner Kenny, her husband, who's a little more like, no, we're we're sticking to the plan. We're gonna double down on what we're doing. So I think that's definitely a good reminder where right now, a lot of people, it's good to really focus on what we've been working on, right? Double down on what we're doing. Yeah, you can look at different things, different strategies, but right now it's really, I think, like Zuber talks about, right? I think there's going to be a lot of winning for people that have been doing the work these past few years and put themselves in positions to take advantage of all the uncertainty out there.
Yeah, no,
Hey,
I agree.
John's here, deconstructing dreams. He also has a short-term rental in Reno, so go check out his YouTube channel. Shoots, I don't know if I have it here. I gotta go
Is
look.
he up to 50 yet? We need to get him there so he can live stream.
If he did, I'll buy him a pair of Crocs for getting to 50 subscribers. He hates Crocs. He gives me so much shit about it. Hold on, I can't find this thing. I gotta look for it.
In
Has
terms
he
of
sent hey dudes
the
your way?
getting involved in like the newest trends, I think that is partially a good idea in some ways, just to give yourself multiple exit strategies, multiple options. You just have to remember to keep evaluating the market and make sure that the strategy is matching your market. I know 2020, one of the big trends was midterm rentals for traveling nurses because hospitals really needed them during the pandemic. Uh, but now in 2025, I'm not sure if that strategy would work as much anymore, just because the market conditions, the demand for traveling nurses has changed compared to what it was during the pandemic. Right now, not that long ago, 5, 10 years ago, short-term rentals with the rise of Airbnb, that was the hot thing. That's what everyone was jumping on. But now those market conditions change too. Airbnbs, short-term rentals, they can still work, but now a lot of markets are saturated a lot. So now there's a lot more work involved in getting successful STR compared to how things were a couple years ago. Where I remember there was a very, very big travel craze right when the pandemic and the restrictions were ending. People were locked up in their homes for the last 2 years, so everyone was anxious to get out and travel, and that created a giant travel boom where anyone who just put up an Airbnb listing with cell phone pictures were able to get bookings. Uh, Flash forward 3 years later, those same uh, people, they are no longer able to get bookings because now they actually have to compete with people who are treating it like a business, that they're looking at market conditions to make sure that their property is matching up with what the current trends in the market is. Like, what are our clients looking for? What are travelers looking for? Make sure that their pictures are good, make sure that they're updating their profiles, make sure they're updating their listing, make sure they're updating their pricing, make sure they're actively managing and observing the property like a business and treating it as a hospitality industry in addition to a real estate industry in order to stay on top of the market and continue getting bookings.
Hey, we got Casey here just tuning in. He said travel nurses still work for him in his San Jose or in San Jose at the moment.
That's good. Like, we did try it for a little bit, just we didn't have much luck with it. As I know other people are able to do it. If they are able to, that's awesome. Like, I'm happy for anyone who's able to find a niche and make it work for them.
Well, and I think that's the thing right now anyways, is just sticking with like what you're good at and what you've been able to do. Not saying to not expand to anything else, but like I I'm pretty big on like just doing what you're good at and just continuing to grow from there. So like I've looked at storage and I've looked at flex space and I've looked at office and all that stuff. And I just got to a point where I was like, you know what? I'm just going to stick with multifamily. Maybe at some point I'll branch into this stuff, but like where we're at and what we're wanting to do right now, it just doesn't even make sense to try to pay attention to those things because we know how to underwrite multifamily. And I don't know how to go about getting a retail tenant or like a flex space tenant. So I just don't even want to add that into the things that we have to learn how to do when we're trying to focus on building up the portfolio.
That makes sense. Well, the more experience you have in one field, the better you get at it, the more you're able to streamline it, the more you're able to kind of grow the investment because you're simply becoming more efficient at it.
Troy has a question for you, Stan. It says, how close is your STR from a hospital?
We are walking distance away from two major hospitals.
Wait, what is walking distance though?
15-minute walk.
Oh, okay.
Yeah.
That's not bad.
So 15-minute walk, probably less than 5-minute drive to both hospitals. We did get some traction on. We tried to use midterm rentals on Furnish Finder. We were getting some uh, requests, but they were just asking for way, way below market, or they were essentially asking for prices that were below long-term rental market rates. If you're going to go with midterm rental, like the theory behind that is you should be able to charge more per month because you have to deal with a higher turnover. So we just weren't seeing that in our market where if our long-term rent was 1,600, we were being asked for 14 or 1,500 on a place like Furnish Finder, which just didn't work for our numbers on a 2 or 3 month lease.
So Stan, we're talking about pivoting and uncertainty in the markets. Are you seeing like your bookings down or people canceling, or what are you seeing from your STR?
Right now, this specific month, it's definitely on the downside. We've only had one booking for this month, so that's substantially lower than it was last year. But we're taking the good with the bad, where, yeah, it was really bad this month, but for the past 4 months, it's been incredible. Especially last month was, and the month prior was Mardi Gras. And between the Super Bowl, between the Sugar Bowl, between Mardi Gras, we just had a consecutive 2 or 3 months of absolutely amazing bookings. So that is one thing with STR where you have to kind of keep in mind where you're going to have your really good months, but you have to also accept that you're going to have some months that are going to be very, very bad. Overall, though, we've been increasing our revenue on a year-by-year basis. So we're moving in the right direction. But there's always, like, you never know how the market's going to react.
It looks like Harrison's asking if any of us have looked at the rent by the room. I assume that's for you, Stan.
We've looked into it. We're open to the idea, but the downside to rented a room, it does add additional complications because now you have to manage not just the property, but the interaction between the different tenants where you no longer have just a single family unit that's renting out your space or people that know each other renting out your space. Now you're essentially renting out a space to three different strangers that are each going to get one bedroom and a shared space. So there's a little bit more management and interaction that could go into that.
No, that makes
Uh,
sense.
as I mentioned, Kenny has tuned in. That is Jen's other half. He's the one that keeps Jen on point and focused on what they're doing. For me, rent by room, yeah, it's too much work.
Yeah.
It seems it's interesting, and it's definitely I think a way to increase your cash flow, but that's just more work than I probably want to do. But I think it's same thing, right? I think if you get your systems in place, like Jared, who's killing it with rent by the room, he's getting all his systems in place. So for him, he's able to kind of be more and more hands off as I think as things go along. Like he says, getting the cleaner and the handyman, same thing, like an STR. Gets a lot of the headaches out of it, right? And if you get a cleaner that's somewhat of a handy person combined, that even makes it a lot easier, right? They're clean, they can fix things and things like that. So, but Troy also says, I will agree, travel nurses did get reduced pay, so they are definitely looking for less than 1.5% of long-term rental value.
I think he meant 1.5x.
Oh,
Yeah. So like long-term rental is 1,000. You used to, in theory, get 1,500 for a midterm rental just to compensate for the turnover. And that's just
Yes.
not the rates we were seeing.
Were you at like 2,400 a month then is what you'd aim for like to have a nurse in there?
If we're aiming for some place that's got right now, one of our rental is $2,000 a month, so
Mhm.
we'd probably be looking for something in the 2,400 to 2,500.
Yeah, that makes sense.
Like if they're just going to offer 2,000, it just doesn't make any sense to offer a 2 or 3 month lease at the same rate as a 12-month lease.
Well,
Yeah,
and you have to pay the utilities and stuff too. Sorry.
the utilities we pay either way, so
Oh,
that
okay.
wouldn't really affect us. It's more along the turnover rate, where if someone stays for 2 or 3 months, then we have to use our time to market the unit again in 2 or 3 months to get another person in there as quickly as possible to reduce the vacancy, on top of the time loss that we're gonna have to do in flipping the property, cleaning it, making it stage ready again for the next person. So essentially, that would be, it could be as little as a week, it could be a month, possibly 2 months, but it's additional risk that needs to be taken into account that we need to compensate for with additional revenue.
Yeah, that makes sense. You guys pay all the utilities?
Yeah.
Do you bill back those in any way?
No, we take care of all the utilities and we
Uh-huh.
compensate that in the amount of rent that we ask for.
Gotcha.
So
Okay, okay.
uh, we charge a little bit more for rent, and the idea
Mhm.
is some of that rent is going to go towards paying for utilities. But we're trying to market our property entirely as, uh, because we do have the hospitals nearby, but we also have
Mhm.
schools nearby, and the students are what we're aiming for more in terms of getting students to rent from us. And we want to make sure that our properties are as move-in ready as possible. So that way, the students can literally show up with their day bag and a suitcase, move in, like the furniture is already there for them. The uh, utilities are already paid for them. They can literally just show up with a bag and they are complete set.
Gotcha. That makes sense. I was just thinking about that. I'm like, man, you could be billing those back. I didn't know you were factoring it into the rent price.
Yeah.
No, that makes sense.
All right. Well, I probably got about 5 more minutes. So if there's anything else that you guys want to throw out there or talk about real quick, or what you're working on or what you need help with, throw it out there, man.
If anybody has any commercial lenders that they really like, Troy says that I shouldn't just be talking to one person, so I need at least 4 more. If you can send some people my way.
I already got, I'll be one option for that. So,
Oh, sweet,
yeah,
awesome. There we go. I need 3 more there.
there you go.
And my fee for that is not
Well,
Casey said hospital and school, you're in great shape. Yep.
We have
Tro-
multiple avenues. Like, that's the property selected. It's just we focus so heavily on location that we found the absolute perfect location for us. Where we have Tulane, Loyola are about a 5 minute drive in one direction. We have two major hospitals in a 5 minute drive the other direction. We are right next to a public transit track that has streetcars going to the French Quarter. So we take advantage of a lot of the tourism coming into the city by enabling people to have easy access to the French Quarter while still staying in an area that is a lot more family friendly, family oriented, a lot more laid back. And on top of all that, we're also right on the primary parade routes for Mardi Gras. So that's why
oh,
we're able to
nice.
get bookings like Mardi Gras 2026, like next year's Mardi Gras, we're already booked. So like, we really like, that's a good advice I'll get to anyone for real estate. Like, heavily focus on location. Location is one of the factors where if you have a good location, you can make the rest work.
I like
all right.
that.
Yeah. Maybe final thing. What did Troy says? STRs, you have to pay for utilities or furnished rental.
Yeah, STR, it's,
Oh
you
yeah.
do have to pay for all utilities.
Yeah, I was thinking from the long-term rental side. When you were saying you pay for utilities, I was like, whoa, wait a minute there.
We do on the long term rental side as well. So
Yeah.
uh, it's the single family homes and the small multifamily we have in Lafayette. In
Mhm.
those cases, the tenants do pay utilities. For the New Orleans property, we pay utilities here.
Yeah, that makes sense because you have like student rentals and stuff like
Yep.
that too. Yeah.
All right. Well, yeah, this was fun. You two go connect on Instagram or whatever, and go message each. Or if you guys need each other's information, just let me
Yeah,
know.
I can shoot you a message on Instagram. I got your Instagram.
Yep. Sounds good.
Stan, I don't know your book. Do you have a link anymore? Is it still available? Whatnot? I
It's
don't
still
know.
available. I've been making, there's two books. I've been making them alternatively free on every Sunday. I can come up with a link right now.
Yeah. If not, I'll be back Friday, I believe, same time with Matt, and I'm not sure who the other person is yet. But I'll be back with Matt, and who's getting his license soon, and in the same area as Stan. Who also does Airbnb. But yeah, we'll be back Friday. Stan's gonna put the links for his books in here. And everyone, thanks for tuning in. And yeah, but did you put the where'd you put the links?
Still trying to find the link. I
Oh,
didn't have it ready to go.
oh man, I don't know if I still have the other one. But
I
if not, message Harrison. Harrison picked it up. That's why. I don't know if this link still works. Hold on, this is the one that I have from before.
should
Oh,
still be the same link.
okay, hold on. Let me use this one. So if anyone wants to check it out, here's the
Yeah.
link on Amazon for Stan's book.
Got it.
Harrison recommends it. And then Troy says, wow, that's perfect location for a furnished rental. Jen, oh, thanks for sticking around, Jen. And yep, Hyder, thanks for always tuning in and keeping the riffraff out. Dylan's channel had a lot of riffraff.
Yeah, I don't know what that was. That's why closer to the start, I was trying to find the link to where it's live streaming on my channel, and I was like, banned for 24 hours, banned for 24 hours.
All right, Andy, Casey, everyone, thanks for tuning in. I'll see you guys Friday.